Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, October 26th. It is already 7:48 as I'm starting the video, and way later than I normally start it. To be honest with you, somehow my alarm clock got turned off and I blew through my alarm, and here we are. I'll try to get it together here for you. Feeling a little bit discombobulated, getting off to a late start. I have my routine. I like my routine, and when the routine gets thrown a curveball, then it takes me a while to get settled in. And now that I think about it, maybe that's a lesson for us all in our trading life, or even in our life outside the chart. If if you're going along in your trading day or just starting it, and you get knocked off center, first of all, recognize it. Hey, something's not right. Maybe you can put your finger on it, maybe you can't, but the thing to do there is to always step away, especially if it's during active trading hours, with whether you got a disturbing phone call or something happened with the dog or whatever. Step away, recompose yourself, whether that takes 10 minutes or 2 hours, and then come back to it once you're stabilized. So anyways, I'm going to dispense with the usual commentary on interest rates and the dollar and TLT and all that stuff. No major developments. We're still in the upper end of the range. Probably doing a little consolidating on rates. You will look in the macro segment of the blog post. Tells you what's going on today. I know I believe we've got a 5-year auction tomorrow, and then we've got a 7-year auction on bonds Thursday. So those will be things to look at on the earnings front. So let's start off here with our equal weight SPY. We're at all-time highs. And the thing I like to do with this chart, as we've discussed in the past, is just compare it to the cap weighted. So we were up 0.23% yesterday on the equal weight. And then on the cap weighted, we were up 0.54%. So pretty much almost double. So what that tells you, or what that should key you in on, is the big issues, the cap weighted stocks, the Apples, and all the FATMAAN names that have that high weighting in the Qs and in the SPY are pulling stocks higher, doing the legwork. And then on those days or periods of time where you see the equal weight outperforming, that means that the workload is much more distributed across the space than being all tilted to the mega cap names. So here on the 2-hour on SPY, you can see the breakout here. So what I've done is moved up our pivots to the 453.5 level. I think as long as we stay above that, and we're green this morning, that we will be in good shape. So I would stay long against 453.5. And as we make this move from wherever you got in, if you got in earlier or whatever, even if you got in Friday, where we had that, I'll call it bad, it wasn't so bad, but down opening candle, if you got in down here at this support level at 451, and now we've emerged above 453, those are always opportunities that I like to take to roll up my strikes, take a little profit off the table. I mean, a couple bucks, right? On a short-term position, that ain't all bad. And then buy some extra time and stay long. So I think that's the playbook for now. Here on the 30-minute chart, there's a little bit more granularity. You can see you could go up even a little bit higher to 454 and a half. It all depends on your time frame. How tight you want to stay in a trade. Find that balance between active trading and over trading, and a lot of times that's not a clear line, but it's one that you need to find in your own trading, because you could just get torn to pieces trying to trade every little micro move that from a technical standpoint don't really amount to anything. So what I like to do is pre-identify those places on the chart that are meaningful from a technical standpoint, and then trade around those levels. And that's what I've done here for you on the pivot and the various support levels. Jumping ahead to the Qs. Now, we had Facebook last night. I think I took a brief look at it this morning, not any kind of an analysis at all, but after an initial hit on earnings, it popped right back up, and I think it was up like 2%. So that'll be a help to the Qs, which have broken out of this little consolidation where PPO, our momentum, has bled off a little bit, as has RSI, but you'll notice we didn't have the correction in price. We had the correction in time. And when you see that, that's a confirming check mark for nice bull market action, when you get a fast leg up and then your consolidation is sideways versus coming back down, more of a stair step pattern than a run up and a pullback and a run up and a pullback. So strong chart. I've dropped in this little channel here you can use as a visual reference, but I think today on breaks above 378, I think you should be long. And if you had gotten long yesterday and carried through your position overnight, this 378 would be a good place to roll up your strikes and buy some more time. And I think above 378, that opens up 380 and 382. And I think, of course, everything's going to depend on the mega cap tech earnings. So today we've got a day off, no big, giant market movers. But then tomorrow, I think we've got Microsoft and Google tomorrow after the bell. So really, we've got two trading sessions today and then tomorrow before those guys report. And what I would anticipate is either a somewhat of a melt up or a holding pattern, unless something comes out that turns everything red. I wouldn't expect that, but you got to be ready for it, know your levels and all that kind of stuff. Here's just a blow up on the 30-minute chart. Here's your 378 in the upper half of this rising 30-minute channel. On any pullbacks to 376, I think you can buy it there with a tight stop below and then get aboard for a move back up. I wouldn't want to see price lose 376. Why? Well, then you lose the midpoint of the channel, you lose lateral support, and then you start to roll down your first location would be 374, and then your next location would be at 372, bottom of the channel. And you know how that goes. If you get to the bottom of the channel, that would be your place to buy with a stop below, and count on this lateral support at 372 and your uptrend line to support price at that point. Moving on to IWM, I have been, it dawned on me that in quite a number of the recent videos, I keep referring to, quote, that big daily range. And so I figured out today would be a good day to kind of refresh people, that chart and why I seem to think it's so interesting. And I believe I've probably put way more interest on it in my own mind than it probably deserves. But we've been in this range from between about 210 to 232, 233 for what is going on close to a year. In fact, it's gone off the chart here. Going back to, it predates February, and I think it actually goes back to December of last year. So we've been thrashing top of the range, bottom of the range, top, bottom, and now we're back up here at around 230. And just from a technical standpoint, we were at the bottom of the range back here in August, and now with a break above 230, I think price will be open to come up to 232.50, which I have marked at the top of the range. And so the reason I find it so interesting, remember that the trading adage, after hard trading comes easy trading. This has been hard trading. Whenever you're in, even though it's wide, it's a harder trade than after the breakout. So after this is consolidated for, let's just call it a year, if we were to get a breakout here at 232.50 or 233, whatever you want to, wherever your line is, wherever you say, okay, that's where I want to be long, I would anticipate, just from experience and market technicals, that number one, you've got a measured move of the width of the box, which is, I have marked at $23 wide. So your instant measured move target is going to be 233 plus 23. That puts you up at 256, right? So even if you haven't messed with this for a year, I would have yourself an alarm in here at 232.50, 233, like I said, at the place where you want to get long. And what I would anticipate is that whether we consolidate here for a long time or break out, that I would think you would get a pretty fast, impulsive move higher on that breakout. I doubt it's going to go right, up $20 to 250, but it could. My point is, you want to be long on this breakout. So I'm already long, just kind of doing the short-term trading thing. And so I'm looking for a breakout above 230 that would take us up to the top of the box. And then we'll find out together, is it just another rejection like all the other rejections over the past year, or do things break out? And I think the difference now is the rising rate environment, the inflation environment, the reopening, things trying to get back to normal. and that's going to benefit the real economy. And that's what IWM basically is. All those regional banks and things that we've talked about in the past, the reopening trades, the cyclical stuff like that, are well represented within IWM. And you get that breakout, you definitely want to be long. I'm going to just jump ahead to FATMAAN and welcome all our new visitors to the channel. Thank you so much for spending some time with me this morning. Had it been a normal day, you'd be getting this delivered in your email box between 7:30 and 8. Obviously running way late today, but if you appreciate getting these pivots, these technical levels, and some market keys for the day early in your pre-market prep process, hit the subscribe button and the alarm bell. Hit the like button. That would also help me a lot to let others know that you appreciated the content. And then, like I said, if you want to get an email every time that I send out content, morning, noon, or night, go in the show notes. There's a place where you can drop in your email. It takes 5 seconds, and then you'll be, part of the team, and you'll also get an invite to our trading room. And we've had a couple of nice additions here lately. People that are contributing and making our trading room even more vibrant. And even if you want to be a lurker, just silently look through the ideas and see if there's anything you like. We got plenty of those guys and girls too. So that would be a perfect thing, especially if you have a regular job and you're not able to participate on a real-time basis. Come in after work, flip through the day's comments. You'll probably get a few laughs, and you'll probably get a few ideas as well. So please do that. And of course, longtime subscribers, goes without saying. I appreciate you being here so much and for passing my content along to your friends and other traders in your community. That helps me grow my channel. Really appreciate that. So Facebook's been in the news with all the, dastardly things they've been doing or not doing behind the scenes. But putting subjective things aside, we've got, they've reported earnings. They took a dip yesterday morning, came right back up to this big gap that runs from, let's call it 329 all the way up to 342. So this morning and going forward, you get a break above 329, 330, wherever you want to set your line. You want to be long Facebook because chances are this is going to fill regardless of what you may think about the company, blah, blah, blah. And I anticipate this is going to happen. Microsoft's going to beat. Google's going to beat. All these guys are going to beat. And if everybody gets it in their head that the Qs are going higher, Facebook's going to go higher. At least I would anticipate it. And if you get price above 329, 330, you've got a beautiful line to shoot against long, where you can shoot for 342 as your target. And don't forget, you may have some intermediate resistance levels where you come up and either hesitate or pull back and then drive forward. So Microsoft has a really nice setup. Apple didn't do a thing yesterday. All I'll share with you is, more consolidation here between 148.50 and 149.50. It reports tomorrow after the, I take that back. I think it's Thursday after the bell. So you may see consolidation until then, go into a holding pattern. But if you get a breakout, I would take that breakout because you may get a pre-earnings run over the next 2 or 3 days, into the print, where you could be up in the low 150s easily if people decide they're going to front run Apple. So you've got your levels clearly defined here. Of course, Tesla stole the show yesterday with its blockbuster announcement that Hertz is going to buy 100,000 cars from it over the next, I guess, couple years. They're going to start delivering those shortly. Get in the sequence, and that gave a big lift to not only the Qs but the EV space in general. And one thing I made note of in the blog post this morning is that whenever you got a market leader like Tesla in a particular space, we'll call it the EV space now, it blows a big hole in resistance for the space. And so yesterday, all the junior EV car makers, NIO, XPEV, LI, symbol LI, Lucid Motors, the battery makers, the commodities in the space all took nice legs higher. So if you're a person, maybe you got a small account, maybe you're a new trader, and you don't feel comfortable jumping in with a Tesla option that's going to be expensive, and that's not your thing, look in the space for a name or two that you can draft off of Tesla, whether it's another EV car maker or, like I said, battery maker, somebody like that you can tail while Tesla's having its run. And also, I wanted to make mention, there was a little discussion in the trading room yesterday, about trading Tesla intraday. And if you're interested in it, go create yourself a 5-minute chart on Tesla and just go through and lay on your support and resistance levels. Now, I sent you a pre-market note yesterday. Let me see if I have a chart here real quick. Oh, I thought I had a 15-minute chart. I don't. But what I told you is mark that pre-market, let things settle out for 30 minutes, mark your gap, and if you were long and you saw that gap starting to fill, that would be a cue to get out, right? Because you don't want to have this thing backfill a $40 or $50 gap while you're long, waiting for that to fill and then reaccelerate. But what I also said, if it holds that gap, you can stay long, or if you're not in it, beautiful line to shoot against. So if you picked up on that note, it never looked back, honestly. And so anything that you got around the 10 o'clock hour or before, and you didn't have to buy it off the bell. If you look at that 5-minute chart, it took a half an hour for things to kind of settle out, for people to, the people that were long and were going to take, that big gain, profit taking, those guys got out of the way, and then the rest of the market stepped in after about 30 minutes, and it held this opening gap. And in fact, you can see it right here on these first two candles that opening gap held. And then the rest of the day, it was stair steps higher on the 5-minute chart, and quite a number of trade locations emerged during the day where little consolidations and little pullbacks happened during the day, where if you missed the first burst, you could have gotten in at quite a number of other subsequent locations. And what I said yesterday, and this goes for all your trading, whenever you get a breakaway like this, and okay, the day is over, right? Drop in your fib retracement levels. Why? Because at some point, it may not be today, it may be, tomorrow, whatever, there is going to be a pullback. And the Fibonacci levels tell you where those pullbacks will likely stop because they work. So you got a 38% level, a half back long, and a 618, and then you've got the bottom or the top of the gap. So those are 4 locations you can look for on a pullback, and you may see, price come off, come back into 990, form a little base, and then reaccelerate. Or you may see a half back to 970. Same thing, form a little base and reaccelerate higher. And if you're not in, if you got locked out or you took your profits up here and are looking for a re-entry, that's the way you do it. Because there's no structure over here on the left, because we're in blue sky territory. There's no real structural support and resistance levels. So you've got to lean on these fibs and look for those retracement locations where you can get in. Microsoft, nothing. Waiting for earnings. It's gone into suspended animation. You've got a little level here at 307.50 and 309. I'd be looking for, some kind of a breakout above 309. If there's going to be a pre-earnings run between now and tomorrow after the bell, get long above 309 and see if you don't get a little run. Amazon has been weak. We have a leg down and now a consolidation. I think still too early to tell whether this builds out a bear flag and moves down, or that it's a move down to support, and then once earnings are released, then it decides which way it's going to resolve. But you can see that we've reached that low, and now we're like consolidating, and we'll have to see if that builds out a bear flag, or if this turns out to be a V bottom. If I were looking at a level today, I'd be keying in on 33.10, and I'd be keying in on 33.45. And if you got, a pull in to 33.10, I think you can buy it there. If you think, technically speaking, that's a good support level, you can be long against that with a little stop below and look for 33.45. If all of a sudden it gets all excited and breaks out early in the morning, breaks out above 33.45, I would get long there and then look for a move to 33.80. Google, much the same as Amazon, from the standpoint of big drop down and now a consolidation in what looks like a flat flag. You've got a beautiful line here at 27.50, and I think that's your pivot for today. Got a gap above to fill, and we're sitting on, or there's another key support level below at 27.20. But I think for this morning, 27.50 is a nice pivot for you. Netflix continues to grind higher. Just showing you the daily chart today, showing you that it's inside this wedge. We're at all-time highs. No natural sellers. Earnings have already cleared. So if you were to get if you're not in and you wanted to be long and you were to get a pullback into 640 that held, that would be a great place to give a long a try. And what you see is the 20 EMA. Well, first of all the EMAs are bullishly stacked. You've got the 8 over the 20, over the 50, over the 200. So that's what you want to see. But if you got a pullback into 640 that coincided with the 20 EMA coming up to the 640, then you've got multiple layers of support below, and that just increases the odds that pullback would hold. Semis, we made a run up here, pulled back, came up, met resistance again at 270. I would set your alarm at 270 for potential breakout there. And I would also set yourself an alarm at 267 in case there was a pullback to that area. That would be an objective place to buy. And remember the big picture that we had a double bottom low structure that triggered on the breakout above 260 and a half, giving us a measured move up to 272, 273. We got pretty darn close. So that I would almost say, mission accomplished. That doesn't mean it has to go down from here. That doesn't mean anything other than we got pretty close to our measured move target. And now this is going to have to resolve either higher or lower based on a breakout above 270 or a breakdown below 267. Moving on to a couple individual charts for you. We talked about FedEx right here at this $15 gap. If you get a move today that looks sustainable with FedEx above 235, you can take that long and look for 250. Now, I believe UPS is before the bell today on their earnings. So depending on how that trades, it doesn't matter if they beat or they didn't beat it. And all that matters is how does it trade. If for some reason UPS were to crater before the bell, you'll probably see FedEx pull back. If you see UPS make a move higher, then you're probably going to see FedEx do the same. But my point is, you got a nice $15 gap above, and you want to be long on that against 235 on any kind of breakout. And then wrapping up with Freeport, quick impulsive move up, a week's worth of consolidation, then a nice 4.5% move yesterday, breaking out from this little, not only a consolidation range, but also you've got some lateral resistance there at 39. So what I'm looking for, because a lot of us are in call spreads for November, is look for this to now accelerate higher. So let's wrap it up there. Keep your FATMAAN names in focus. See if the Qs can drive higher. Go ahead and make an all-time high, which it has not done yet, unlike SPY. And then watch your IWM for a breakout or a move up to the top of the box at 232. This morning, you've got a nice pivot at 230. I think you can be long against that level. See if you can get a push up to 232, 232 and a half, and ultimately get a breakout of that year-long consolidation range. So have a good morning. Again, apologies for the late video. Hopefully you'll get it in time to have some actionable content there before the bell. So this has been Chris Buss with Traders Profit Compass. Talk to you next time.